All right, and welcome everyone. Good afternoon, good evening, or good morning, depending on where you are joining us from, and welcome to another episode of the AI Circle. This episode will mark lucky number episode 13 for those of you that are superstitious out there. Of course, I am your host, Aaron Yoon. I am the product manager here at iFlip, and joining me is none other than our chief investment officer, Kelly Korshak. Welcome, Kelly.
Hello, Aaron.
Are you excited for lucky number episode 13?
Well, hopefully be better than last week when I had physically a cramp in my leg from
Yeah, we had
talking.
you cramped up, and we had numerous technical issues, and that extended into the mailbag the next week as well. So, yeah, I'm having mixed feelings about this new platform now. Well, hopefully we've done a lot of testing and a lot of prep where we've addressed most of it. So fingers crossed. I hope number 13 it proves to be
It'll be
lucky for me
better.
today. Now, we have a ton of stuff to get to, so we're gonna jump right in. If you missed the mailbag last week, we announced a lot of really cool things that are coming to you at iFlip, and I'm gonna go over those again. We're gonna get Kelly's comments on that in just a little bit. We're gonna start off with Kelly's market updates, and we're gonna talk a little bit about what the AI is, how the AI is interpreting those market updates and the market movement, and we'll get into the fun stuff with Kelly's predictions as well. We have to check if his previous predictions were correct, and he has a couple of new ones for us for the next AI circle as well. Before we can get into any of that, though, we have to do everyone's favorite preamble, and here we
The
are with
disclaimer.
the disclaimer. Absolutely. Let's see now. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smart Folios that you select are suitable for your investment profile before trading in a live brokerage account. Now, with that out of the way, I'm going to pass it right back over to you, Kelly. And please give us an update on the markets the past couple of weeks.
All right. Well, again, hello, everybody. I'm Kelly Korshak, the Chief Investment Officer of Flip Financial, or iFlip Investor. We're going to start today and create kind of a more of a constant format for everybody. I want everybody to know that most things in this world are driven by interest rates. So that is where we will begin. I'm assuming everybody can see the chart up there. It might be a little bit ungranular. However, what it is that a 1 month, every one of those little bars there represent 1 month of the price of the US Treasury bonds. So just to make sure you understand, we're looking at a chart of price, which means as the price goes down, interest rates go up. So I thought it would be good to kind of show where interest rates were over a long period of time. As you can see right now, this is where they are this month. This last line on the chart, I hope everybody can see it where my little hand of the mouse is pointing. And you might, if you can see it, you will see that this is a month where interest rates have gone straight up, which means the price has gone straight down. And if you look at the month before January, interest rates actually went down. And there was the rally in the stock market. The interest rates call the shots. Remember, the interest rate market and the world debt market is many-fold larger than worldwide equity markets, literally, generally by a factor of 20. That means there's at least $20 more invested in debt than there is in equity, which tells you how the world puts its money to work. And right now, the world is selling bonds. Take a look at this. Let's go back as far as we can in this chart. We're all the way back to 1999. So I want people to understand in the context of what, since the year 2000, what has happened to interest rates. And we all know what's happened to the market. Basically, over the last 23 years, except for last year, the interest rate market has gone lower in rates, higher in price. With the exception, of course, of 2008, take a look, we had a big rally in price, which means why? Because we had the financial crisis and interest rates were cut to be able to manage the financial crisis. But I think in the context of things, what we saw last year was a 20% correction essentially in the S&P 500. But look how much the bond market failed since 2020. Look at this change. This is a secular change in interest rates. When you see a secular change like this over the last 2 years, but yet the stock market, where the interest rates have gone up, but the stock market has also gone up, something is amiss. This is the backdrop of the world we live in today, where we are in a world of higher interest rates, higher inflation, but yet stock prices have remained basically steady. Let's take a quick look. Here's the S&P 500 over the same monthly period going back to the same time. The market has made a very modest correction in the stock market since this period. This is a monthly chart. But again, I'm going to go back to the bond chart. Notice the difference. The bond market has made a huge correction, but the stock market has not. It's down relatively little, given where interest rates have gone over the last 2 years. This is one of the reasons why people are predicting, some people, including at Morgan Stanley, is predicting 3,800 on the S&P by the end of the year. And I've heard others talking about 3,000 over the next 2 years. And I've heard other people literally go back and say that they feel the market could correct all the way back down to 2008-9 levels. In other words, that the stock markets, believably, could be cut in half. Those are things that when people say it, we don't want to hear that if we're long-term stock investors. But nonetheless, I can see by looking at a simple chart why they would think this. Those things on a chart make some sense to me, and there is a reason to be able to say this is a possibility. I do feel it's remote. However, one thing for sure, when I see these kind of disparities over a long period of time, in this case 2 years, something is wrong, something is amiss with one of these markets. Either the debt market has it wrong or the stock market has it wrong. One of them is going to be proven correct. Generally, it's the bond market, mostly because the magnitude, again, of the bond market is so much more important and deep than the stock market. Let's take a look at the dollar, because at the end of the day, there's two things that the AI looks at in terms of price to be able to determine which is the direction of the stock market, which we're mostly concerned of. And one of them, of course, is the bonds that you've looked at here. And now we're going to look at the dollar. Let's go look at a dollar chart. So look at the dollar on a monthly basis. Not much to tell. We can go back to the dollar for many, many years. Here we're going back into the 1980s. So the dollar is not really giving us any real magnitude of what's changing in terms of the other major currencies. Notice it stays in a range. It's a large range over the years, but this is the way the economies work. Generally, when G7 gets together, they basically are trying to say, let's keep our currencies inside of a band. Well, guess what? Those bands are the ones that are these little blue lines here. They're doing nothing special, just little blue lines. They say, we want to keep it inside of these bands. Well, recently, as you know, the dollar was very strong. Just a few months back, we were talking about it. And now the dollar has fallen back into the range that the Federal Reserve and the G7 wanted in. So the dollar right now isn't either overpriced or underpriced. It's just reflecting the fact that the interest rates in the US are higher than that of Europe, and which is, again, what the dollar is generally measured against. And that's why it's closer to the upper band. But from this data alone, it's not like we have a lot of indication about where is the future direction of the stock market. So AI right now, this is some of the data points that the machine learning algorithms get, and this is not going to tell it much. Let's take a look. So let's understand that we have two things. We looked at the dollar, we looked at the interest rates on the long bond. Let's take a look at a shorter bond if we can, like a 2-year note. We don't go back as far in history, but I can tell you this, what we're showing going back just over the last 4 years of data, that we are in, and if we go back even further, we are in the higher end of the range on these products as well. So short-term interest rates are much higher than they used to be, and we all know this to be true. This is also a very important indicator about that the machine learning algorithm looks at to be able to determine future price. So this information right now, when we see this, I can recognize how the machine learning will work because it does read these data points, and these data points would tell anybody that that higher interest rates are afoot, and that means likely over time it will give us a signal to go get out of the market. I think most of you also know that right now, if we look at the stock market, let's go to the spider. I think you've seen recently, let me find it here. Here's the chart of a 1-month spider going back. We are at the high end of the range for the year, even though the bond market, again, is making new lows or new highs in interest, in price and yields for interest rates. This tells me long positions are currently dangerous. I'm suspecting, therefore, that the AI and or the algorithm itself, one of the two, will anytime now pull us out of the market to stand again on the sideline for a while. So I'm predicting, my first prediction is the AI will make a signal very shortly, very likely next week, to determine if we should be in or out of the market. And I think at the end of the day, by sometime next week, should the market drift a little bit lower, we will be out. That being said, for all of those out there that have portfolios, know that our stop and the way we would get out is only a couple of % away. We're not here to be heroes. We are nervous longs, as I've mentioned a few weeks back, but a nervous long has to be able to pull the trigger to recognize the facts. And right now the facts are telling me, both algorithmically and machine learning wise, that the data does not support being long the market. There's another few data points I'm going to mention right now too. You guys might have been, most people are starting to hear about this. Credit card defaults and credit card debt, both, they're different items, are at all-time highs. In other words, people are using their credit cards as the piggy bank. They're using them to even pay their mortgages. That is not a good sign. Furthermore, credit card defaults are also at highs not seen since the 2008 Great Recession. That tells me, again, more data that the AI reads, this is data that comes from the Federal Reserve, is pointing towards an exit in long positions in the markets. So we've heard a lot of pundits feel that the lows are in. And I say to that, I'm not so sure. I don't feel the lows are in and that the bear market is over. They also point that most bear markets last between 12 months and 18 months. Well, right now we're at 13 months. And I can tell you that since so many things are brand new to us and so many things are new paradigms, I have a feeling that this bear market has a little more legs and may be something different than we've ever seen before. After all, we are coming out of COVID. And after all, we are pulling back on our balance sheet that is the most the federal government's balance sheet is as most inflated as it's ever been. when we put all these things together, it's very hard for us to say we're bullish on the market. So as much as I want that market to go up because we have long positions, note, folks, that my prediction is that the AI will promote a signal sometime early next week to get out. I hope I'm wrong, but that is what I'm going to predict. There's other things that are also giving us some indication that these things are not right. Let's take a look at some of the NASDAQ leaders. Remember, the NASDAQ had a wonderful January. Let's take a look at the triple Q. So in January, let's go to a daily chart, not a monthly chart. This, of course, was January's move in the NASDAQ from all the way down from around 260 area, all the way up to early February to 307. That's literally a 47-point move from 260. That is almost like 17%. But look what's happened lately. It's starting to fall back. It is starting to fall back as an index, and it has gone from 310 to 295. That's 15 points on the 300. And so we know that's 5%. So we've given back about 5% of the 17% rally that we saw in January. And this month still has a few days left. Why is that? Look at the main stocks in this index. Google. Google has given away almost all of its January rally. Let's look at Amazon. Amazon has not, but it's given away 50% of its rally, from 85 basically to 110 back to 95. It's given away actually a little more than half. So what is going on when these, and let's look at Microsoft. Another example, forgot, it's a big one. Microsoft had a huge rally from 220 to 275. That's 55 points, like a 30% rally on what information? This is people believing that the bear market is over. But look, it has also given away at least a third of that. And so when I aggregate these kind of moves in this kind of pattern, these are not the signs of a new bull market. This is a sign of a rally that should be faded. In other words, those wicked bull market rallies inside of a bear market. So again, don't be surprised to see all of this possibly given away in the coming month or two, which was part of our prediction before, that the market, it started out thinking that, hey, this January we're going to have a good year. However, I think realities are starting to set in, and it starts from the interest rate market. When I look through the pockets of stocks that I watch, I don't see anything that looks to me exciting where I want to get on board and own it. Let's look at stock. One other stock I have to point out, Lilly. Eli Lilly has done very well over since October. So Lilly was making new highs pretty much all of last year. See, it was a good rally last year. However, now, since last year, when the rest of the market went up in January, Lilly went down. And now it's closer to its lows. And it has fallen off from 380 to 330. Well, 50 points on 380, that's about 14%. These are not stocks that look as well as they did not too many months ago. I see weakness all over the place. Let's look at Walmart. Walmart is hanging in, but this is a story where it will follow Home Depot, and Home Depot reported and they had a big miss. So and I think that was today or yesterday. So yesterday was Home Depot. So when we see these things in aggregate, the end of the day, my prediction is that the market is going to have to go lower now. It is starting to unfold like we were speaking about, that the market is going to move about 3 or so percent up or down, was my last prediction. And Aaron, you can hold me to it. But the market has now moved down about 3% since last time we spoke. And the market is yet to make any new highs. So folks, this is one of the reasons why we trade programmatically. Programmatically, this data is all collected for us through computers, and it's doing the same analysis essentially that we just did without the fundamental data points that I was mentioning before, like credit card defaults, credit card expansion. And oh, by the way, another one that I mentioned before, we watched auto loan defaults. Auto loan defaults are at the highest levels in history. Those, again, if we look around the board, if the consumer is so strong and the market is so strong and the job market is so strong, then why is everybody defaulting? And why is their credit cards expanding? That doesn't follow. That tells me it's not just about being a nervous long. It tells me maybe I should just be nervous and sit on the sidelines. So again, I am making a prediction, and it is my own prediction. However, the math always bears out. Math really doesn't lie. And the anticipation of using machine learning to figure out some of these things also is telling me that in this case, it is not something that we have to be concerned about taking over the world. It is not something that we're using to create answers to whether or not a politician is good or not. It is not those, what is it, Aaron, GBT?
Chat GPT.
Yeah, Chat GBT. It is an analysis that we've been doing for many years on the stock market, using fundamental and other price points of data that comes from the Fed and other stocks and information around the world. And when we aggregate it through a machine learning algorithm, it is not pointing to a bull market at all. So that is essentially all I've got to point out. And I've used 20 minutes to point out where I think the market is going and why our algorithms are teetering on getting out. If we should get out, by the way, folks, we would be taking approximately a 1.5% loss on the existing position, maybe 2%. However, that's worth it, again, given that if the market moves where it is anticipated to move, that could be another, hate to say it, 15% lower on the market sometime by May. So there's a new prediction. Finally, let me go over to Bitcoin. I want to quickly do that because Aaron has some things to tell you. And I'm going to bring up a Bitcoin chart. I think you guys are basically keeping an eye on this. My prediction again is that this market is holding very steady. We all know it's up approximately 50% from its lows from last October. Down here, as you can see, we're around 17,000. I mentioned this last time. Market hasn't moved too much in the last 2 weeks, but recently it has jumped to the 25,000 level from the 23,000 level when we talked last. My prediction again is for 30,000, and I sense that could be a challenge, but I still feel that that is possible. However, it is probably a little less likely if the stock market should go down. Remember, when people start to get worried about their positions and their wealth, they sell everything. They don't sell just the equities they have. They sell even their bonds. They will even sell their Bitcoin, and they may sell their children should things come in bad enough. I do know that people in a down market are willing to sell things, including the baby with the baby water. So on that note, I think I've just looked over at the clock that 25 minutes of Kelly rambling on should be about enough.
Kelly, if we could, we'd have you on all day, all night, because we just can't get enough of this stuff. Now, unfortunately, we are constrained with time, so I want to button up a couple of things. We had the prediction last time. We just got to check in because it is the last AI circle of the month, so we have to check in on the previous predictions. You predicted that the NASDAQ would go down by 3%, and I'm looking at the charts thinking that was right on the money, right?
Well, and sound off, Aaron, I was wrong. It went down like 6. So,
oops, so everyone, sound off in the comments section whether you were thinking that Kelly was going to be right about that, or whether you thought he was, or maybe you were hoping he would be wrong about the market going down by today. Your prediction for Bitcoin was to 23.5K, 23,500. It didn't quite get there. So like, do you hold that that 23.5 as a support area or something that you think is going to happen
Well, I
soon, or are you
predicted
just
it would go higher, and it did. It went from, we were at 23,000, 22,000. If you look at this Bitcoin chart, if you just count back the 14 days or 10 days ago, we were right around the 22, and now we're at 24. So I thought it would go to 23 and a half to 25, and it is really at 24. But my real prediction at the end of the day, in the coming months or weeks, is going to be 30,000.
Gotcha. Okay, thank you for clarifying that. Um, okay, and then the final one was about Tesla. Tesla, you predicted that it would go down, and it would be something around the 160 to 170 range by the end of February. Now, obviously, we have a few more days before the end of February, but how is that one looking?
Let's take a look, folks, if I don't have it up. Right now, when we talked last, it's essentially a little bit higher than we talked last. I'd figure our last AI circle was here, February 7th or so. So at that time, it was about 193. We're still at 200. Right now, I am wrong on Tesla, but give me time. Give me another couple of weeks, and I think we'll see Tesla have a little bit of problem in here. I will admit that Tesla is holding up pretty well.
All right. So we had 3 predictions. The Tesla one was wrong. The Bitcoin one and the NASDAQ one were right on the money. 2 out of 3 ain't bad, right? So 2 out of 3 is the score for today, for Kelly's predictions. You predicted that. Yeah, I know you wanted to get 100%. I know.
I do.
What are we predicting is going to happen by the next AI circle, Kelly? I know you said there's a possibility that our AI will get out, but
Yeah.
do you have any predictions on like where certain equities or ETFs or indices will be at?
Yeah, I do. I feel that the market will be within another couple of weeks, we're going to be another couple, 2 to 3% lower. We could do that in a day, but the market will just grind its way lower. I think we've seen what we're going to see for the year in the short run. In other words, the highs are in.
Okay.
And
Gotcha.
so let's leave it there, because right now, if you just have the general consensus, I don't have any information that supports anything but lower in price. And the good news is AI will take care of that on a one-off basis.
Right.
But at the end of the day, yes, I'm predicting another 3% lower or more by the next AI circle.
Gotcha. Okay. Now, I think I do have a couple of more questions for you, or rather, I have some announcements. I shouldn't say questions, but I will give you all some time to do the trivia question for today, because I know that's what most of you are sticking around for, and this is a fun one. I'm going to give you a little bit of time to think about it, because this isn't something that is Googleable. So I am going to give you a little bit more time, okay? Because it's iFlip related, all right? So let me bring this up, and I'm going to give you some time to put in your answers while I make some very key announcements about a lot of cool stuff that's happening at iFlip, okay? So here is your trivia question for tonight. What is the most popular Smart Folio at iFlip? Now, what I mean by this specifically is which Smart Folio has the most money in it. Okay, not the one that people talk about the most, because how do you measure that? I'm measuring this with dollars invested into the Smart Folio. Okay, so I don't know how you would know that really, so that's why it's a trivia question based on your instinct. If you've been following us for a while, what do you think is going to be the Smart Folio that has the most amount of money in it? Okay, so take a few minutes to glance at your app, give it some thought. But meanwhile, we do have a couple of announcements, some key announcements to make. Really cool things happening soon. Now, what are they? So the first cool thing that we have coming is something that everyone has been clamoring for a while, which is recurring ACH deposits. That is coming very soon. It is in testing right now, and we will deliver this to you very soon. I don't want to give an exact date, but definitely, this is definitely a Q1 goal. Okay, so end of March, right? It's a Q1 goal, and this is coming soon. So let me know how you think about that. Let me know what you think about this. Are you excited to be able to set up recurring deposits to your iFlip account? You don't have to come in every 2 weeks or every month anymore. You can just set it up automatically. Now, the next cool thing that I'm sure everyone's going to be excited about is fractional shares. This is in the works. We are ready for this. Everything is approved from the legal standpoint and whatnot, and this is ready to be launched also very soon. Our dev team is working on it tirelessly to get it rolled out to and updated and released. Okay, now what does this do? For I think the logical follow-up question to fractional shares is, well, how does that affect the minimum requirement for certain smart folios? There is a limit to how fractional you can get. So there will still be a minimum requirement for smart folios. We don't know where that is yet. We're trying to keep it under $1,000, between maybe $500 to $1,000 or something like that. But that'll be universal throughout all the smart folios now. Right now, it's like some smart folios are minimum requirement 350, some are 850, some are over 1,000. It's kind of all over the place, and that's because we don't have fractional shares. With fractional shares, all of that gets unified onto the same playing field. Okay.
Let me make a comment on that real quick for everybody. It also increases better put this way, the amount of error is the way I would say it. But it really is by reducing the amount of error, we are increasing and optimizing the portfolios to do exactly what they're designed to do. Again, with round lots and certain amounts of money, it's sometimes you round down so that you can own things. If you round down, that means you're not maximally invested, unless,
Right.
of course, you have a lot of money on the platform. And this is true of anybody.
Right.
And so this is a very important feature to create an efficiency in the market on each of these portfolios. And again, that's really what we're always trying to do, create efficiencies using machine learning, algorithms, and now the fractional portion. It gets us as close as we can possibly be to making sure that these portfolios behave exactly the way they should for each and every one of you.
Awesome. Now I'm not seeing that many submissions for the trivia question. I don't know if it was too difficult, but in literally about 60 seconds, we're going to pick the winner. So get your answers in. Which smart folio do you think has the most money invested into it on the iFlip app?
I was wrong, by the way, because I know what the answer was, but I was wrong.
Yeah, that was yeah. We were actually talking about that before the show. Where it was like, Kelly, do you know what it is? And
I thought I did.
He thought one thing, and then we looked at the actual numbers, and it's actually something else. So this is totally, yeah. We'll totally, talk about that afterwards as well if you're interested in that story. But the last thing that I want to announce before we announce the trivia winner is I want everybody to get their calendars out and save the date, May 4 and 5. Cinco de Mayo, if you need an easy way to remember this. That is the date. Those are the dates, right? It's a Thursday and a Friday. And those are the dates for our upcoming event. Our previous event was in October. It was a blast. It was in Dallas. We had a great time. It went so well that people asked, okay, well, when's the next one? Well, we didn't know that we were going to do a next one until a few months ago, when we were able to negotiate with the hotel and everything. We're finally able to lock down a date, and it's going to be in Dallas again, not exactly the same location. We'll give out the details as they come out, but save the date. That what's in for sure is May 4th and 5th. So save the date. We'll be announcing our next iFlip hosted event, live in-person event shortly. Okay. All right. Now let's get back to our trivia question. We got a couple of answers in. I have a quiet audience tonight. I don't know. Maybe it was I stumped the audience with too difficult of a question. But we do have the right answer here. And let me bring up the question and let me bring up the question again. Again, the question was, what is the most popular smart folio at iFlip, aka what's the smart folio with the most amount of money in it? And the answer is Red Oil, with a grand total of, let me pull this up. Red Oil is by far the winner, with about $2.5 million invested into it. So a lot of people are big fans of Red Oil, and it's done very well. That means our winner for tonight is, who said it first? Rosa Valencia is our winner. She said oil, and then she clarified. I'm going to give you the benefit of the doubt, and think she said you meant red oil. So
Red
congratulations to Rosa Valencia. Thank you for playing. You won. Yes, yay, yeah, you won. All right, and stay tuned, everybody. We do have some more content coming out. Like I said, we are going to do a. Oh, I didn't announce this one. Okay, well, this is actually kind of perfect because it actually fits really well with this. The last announcement that I'm going to make that you should be on the lookout for, because we don't have time to do it on AI Circles, is a Smart Folio Revamp. All of our Smart Folios are going to get an upgrade or a facelift or a consolidation, depending on what Smart Folio. But our 3 core Smart Folios are going to look something like this. Let me just bring this up here. Give me a second to load up it. There we go. Here's the visual. Okay, so most of you are already familiar with the Conservative Plus, the Mod Plus, and the Aggressive. Now those Smart Folios are going to be upgraded / converted into a conservative, balanced, and aggressive is going to stay aggressive. The name just is speaks for itself. So what this means is, for the most part, all you would really need to do if you're just a regular new investor is pick one of these that fits your investment palette, your investing philosophy, and your personal finance situation, and just that's it. And a lot of the other Smart Folios are going to be consolidated into these. So theoretically, you wouldn't need any other Smart Folios other than your core strategy. Now, if you want to choose something like Red Oil as a icing on top of the cake, then absolutely you're welcome to do that. But we're really working on simplifying the investing experience inside of the app for you all. Now, that means that you probably have a ton of questions as to what constitutes aggressive, balanced, and conservative. We're going to be coming out with a deep dive content. It's not going to be a live thing, but keep an eye on the YouTube channel for that to be released. So that being said, I think it's very important now, if you haven't already done so, to smash that like button, hit the subscribe button and the notification bell so you don't miss out on the very cool new announcements that were coming out very soon. And make sure to comment on the video below if you like this content, and stay tuned for the next video from the iFlip YouTube channel. We'll see you in 2 weeks for the next AI Circle. Good night, everybody.
Good night, everybody. Take care. Be well.